Hey everyone, Kevin Lewis with Home Life Benchmark Titus Realty, and it's time for your October 2022 Fraser Valley Real Estate Market Update. Now that September 2022 has come and gone, we've got more of the same happening that we've seen for the last several months. Sales are still down compared to 10-year averages, and especially way down compared to just a year ago. Prices are also down, and new listings and inventories are continuing to build up. All of this happening while we're achieving some sort of balance in the market. So what is really happening in our market right now, and why is everything happening? Well, like I just said, sales are way down. In fact, they're down 39% compared to the 10-year average. So why are we seeing these sales go down? Well, this is pretty normal to see in any sort of a declining market as we're currently in. Of course, we're aware that prices are currently dropping. Now, as we've touched on a few times in past videos, recent past videos, it seems to me that the prices dropping are tied quite closely to the interest rates. As I broke down last month, you're looking at roughly the same monthly payment that today, based on today's interest rates, as you would have been for much higher purchase prices but lower interest rates back in March 2022 when the market really peaked for its benchmark prices. Now, I would likely predict that we're going to continue to see prices decrease as we see interest rates increase over the next few months, if they do even continue to increase. I'm not making any predictions as far as what the government's going to do. All that I'm going to do is look at what the recently has happened and the recent trends based on what could come in the future. And most reports are saying that there's likely going to be another interest rate hike in the future. So I think it's best to make sense that we prepare for that. And if that rate hike does come, we can pretty safely bet that prices are going to continue to drop with that increase in interest rates. Once again, that increase is going to keep monthly payments for the same property type relatively similar month to month. As the purchase price drops, your interest rates go up, and those monthly payments stay right around the same point. New listings are coming onto the market at a slightly lower than 10-year average rate. However, they're coming on comparatively to the sales at a higher rate still. So we're 16% below the 10-year average for new listings, and 39% below the 10-year average for sales. This disparity is allowing us to build up more inventory. More inventory, of course, is tied directly to the laws of supply and demand, if inventory being supply, demand being the number of buyers. The number of buyers has gone down, of course, but that's a much harder number to quantify and to follow and track. However, the total number of homes available is a very easy number to track, and we can track that closely. And the inventory has been building month over month over month, especially as we've seen this decline in prices and the slowdown in total number of sales. Now, if we take both of those stats of the total number of sales and the total number of listings, we get what's called our sales to active listing ratio. For the month of September 2022, overall we came in at 15%, which is going to be considered a balanced market. So 15% meaning that 15% of homes listed in that month, whether they were listed prior to that month or not, just they were listed in that month, were sold in that same month. Anything from 12% to 20% is considered a balanced market. Anything above 20% is considered a seller's market, and anything below 12% is a buyer's market. Now 15% obviously lands pretty close to right in the middle, which would tell us that we're in a very balanced market. However, if we break that down a little bit further, attached homes, condos, and townhouses are actually at 21%, so technically they're still in a seller's market, though barely, and it's very close to a balanced market. And single-family detached homes are coming in at 12%, which again is right, it is technically a balanced market. However, it is nearly into buyer's market territory. So we've been flirting with that buyer's market territory in the detached homes for several months in a row now. However, if we look at the whole market as a whole, which is really how we should be looking at it, as everything is tied together to itself, we are in a balanced market, and with that balanced market, we expect stability. Most people would think stability means that prices are going to remain level. However, as we've touched on already in this video and on several past videos, that stability is now remaining in the affordability, which is your monthly payments, based on the interest rates rising and prices dropping to keep the monthly payments about the same. Therefore, balanced market is equaling stability in our market. So if you're thinking about making a move in the near future, you might be wondering, well, is now really a good time to do so? If you've watched my videos before, you read my newsletter, you'll know that I always say it's always the right time to buy is when it's, or sell, is when it's right for you. Most people are going to be buying into a market or selling their current home and then buying another home. That's the average real estate transaction. And if that's the case, everything is going to be relative. Whatever you're going to sell your home for, if the market's up, you're going to get more money out of your home, but you're also going to pay more for your next home. And if the market's back down, well, you're going to get a little bit less out of your current home, but you'll pay a little bit less for the next home on the total purchase price. So everything remains relatively stable. Now, if you're looking to buy into the market, you might say, oh, well, prices are coming down. Why would I buy now? And you make a good point for sure. However, as we've touched on again, that affordability factor, you're going to be getting into the same monthly payments. So the real benefit to buying lower is that you have more potential for the equity to build at a higher rate if you buy a little bit lower. Now, it's always impossible to time the bottom prices. It's much easier to say buy low, sell high than it is to actually do. Otherwise, we'd all be millionaires and everybody would buy low and everybody would sell high. But wait, that wouldn't make sense because nobody would buy high. Anyways, that's not the point of what I'm getting at here. The point is that if you're ready to buy and the right property comes up now, in my opinion, it makes the most sense to grab that property now and get into the home. That way you're not sitting there wondering how much prices are going to come down. If interest rates keep going up, but prices come to a point where buyers say, do you know what, this is low enough, we're going to start buying again. And this stability that we've seen over the last several months actually stops. And that stability meaning the monthly payments. And we see prices stay where they are, but interest rates go up a little bit more, you're going to be in a worse position. Again, I'm not making predictions into what the future holds. I'm just looking at things based on what's happening now and what has happened recently. And with all of that, I would say that now is not a terrible time to buy based on not knowing what the future holds. However, if you're not finding the right property, I wouldn't rush into something that just doesn't feel like the right place for you. Take your time, find the right place, and when you come across it, that's when you pull the trigger and make that purchase happen. And finally, if you're looking to downsize, meaning selling most likely a detached home or a larger townhome and get into a smaller home, probably without a mortgage, that's where you may want to move a little bit sooner than later. As we know, prices are falling, and as we've already touched on, detached homes are much closer to a buyer's market than a seller's market. Therefore, they're probably going to drop in price a little bit faster, as they have been the last several months as well. So all of those factors together is telling you that you're probably going to be losing more money on the sale than you'll be gaining on a lower purchase price. Also, add to that, interest rates really don't matter most of the time in this situation, as you're likely going to be taking the equity from your current home in order to purchase your entire next property. So looking at the interest rates and timing it based off of those when you're really not going to have a mortgage makes things kind of unnecessary, and you're probably going to see the price of your house drop at a much higher cash value than whatever you're going to buy into next is going to drop at that same cash value, leaving you with just simply less money in your pocket at the end of making the transaction happen. So again, my suggestion, if you are downsizing and not going to have any sort of substantial mortgage, probably be best to make things happen sooner than later. All in all, things are a little bit slower in the real estate world, and yeah, a lot of people are going to say, oh, now is not a good time to buy or sell. However, as I've said many times in this video alone, the right time to make that move happen is when it's right for you. So if you think that time is coming up, or you're just toying with the idea, get in touch with me today. We'll have a chat and sort of see where you sit with things and see if it is actually a good time to make a move happen, or if it is better just to wait for things to settle out a little bit and see where you're at that point. Whatever your plans are, let me know. I'm always happy to help and break things down and create a unique plan for your situation. Give me a call, 604-218-5635. Leave me a comment below, send me a message, send me an email, kevin@kevinlewis.com. However you want to get in touch with me, be sure to do so sooner than later, especially if you're thinking of making a move happen. Thanks for tuning in.